Hi, this is Jack from Alpha Charts with a state of the market video. Today is May 15th, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my channel. I really do appreciate it. It does help me out, and it helps me to continue to make this content. So I really do thank you for that. Also, you can find me on Twitter at AlphaCharts365. All right, so starting with the SPX, great day on Friday, great close to the week. And let's just look at the weekly real fast. You can see it was down 1.39 on the week. But I think more importantly is that um, it came up and closed this gap. And I think that's going to be interesting to see what happens next week. Um, I like that the SPX is above all its key moving averages. Um, and uh, and I think that's definitely a positive for it. There also, as you can see, some of the longer term ones are still rising. By the way, 65-day EMA, 23-day EMA, and this blue one is the 9-day EMA, just so you know what I have on my charts this week. Right, tends to be my go-to. Those three. A lot of times, I'll just have the 23-day just for simplicity. Let's look at Qs though, because Qs are the really more interesting. Busier chart, and won't go through where we've been. Let's talk about this area, right, since the beginning of the year. So we came back, retested this important area. 300 is extremely, extremely important, right? And then came up, made a new high, couldn't push higher, and then rolled over, right? That's where we've been. On the weekly, we're down 2.34 in the weekly. All right. Um, so Friday was a great day, right? I mean, we had a big up day, 2.21%. My account was a little bit better than that. So that made me happy. But there's a few things to think about now. So first off, on the Qs, where are we? We are coming right back into these moving averages, and the 50 day is right there also, if I put the 50-day on the chart. So, which are flat right now. All right. The 9-day is still declining. This big move up was on very low volume. So a low volume bounce. Question is, was it that this rubber band got stretched too far to downside? There's your bounce back. And then we roll back over one more time, A, B, C, like that. I mean, I think that is, let me, if I could find my tool real fast, I think it's in here. Nope. I'll just look for it for a second. But yeah, I think it's more of an ABC. Yeah, what the hell? We'll just do this. Boom, boom, and then boom. Um, I don't think that this correction that we're in is in some major top or anything like that. But I do think that there's a chance that we go lower. Obviously, there's a chance we go higher. But if you look at the ramp up on volume, it was to the downside. Then when we came back on a nice up day, much lower volume. It just tells me institutions aren't really all that enthused about this rally back right into this key moving averages too. This would be a spot that we will see on Monday if it rolls over or continues higher. I'm going to stay flexible. I just think that the growth land, right? Because that's what we're really looking at with the Qs, the growth stocks, the tech stocks, the things that were working the last 10 years maybe won't be working, at least in the short term again. We may have some more pain. And so if we look at it, let's just do a measured move here. Again, I have not done this study. So let's take a look. 7.8. And let's take a look and see what the 7.8 is from here. 7.8 would be, sorry. Oh, look at that. Almost right to the 300 level. That's interesting, huh? ABC would work out, at least mathematically perfect if it started to either base and roll over early next week or whatever it does, base consolidate. So that is, I think, my highest probability. I put on a very small short, very, 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 very small tactical short just to play to the downside and you can say a quasi hedge to my portfolio. In case this does roll over, I'll take it off real quick early next week in case in case it doesn't roll over, right? And we just kind of make a, a higher low, higher low, higher low, higher high, higher high. So again, on the longer term time frame, it's no big deal. Even listen, even if you come back into this area and don't come all the way down to 297, right? And you just kind of come to 300, 305, whatever. It still made a higher low if that in that case. So again, just something. Also I have the fibs on here, but the 0.618 is right in this area. I think that's important. Also, we'll see if it rolls over from here at this 0.618 or if it continues higher. We'll know pretty quick next week. So definitely something to watch on the cues. All right, IWM. Actually, let's go back before we go IWM. RSP, equal weight SPX, looking fine. I mean, near all-time highs, nothing really to see there. Rotation is alive and good. Equal weight Qs. If you notice, the equal weight Qs actually look a little bit worse than the other Qs, just by a little bit, but it's there. Again, it may show that there's not a lot of conviction and that the larger cap names are holding up the index. So I thought that was interesting, that this looks worse. All right, but let's look at IWM. IWM, again, trying to make it back through all the moving averages that are now really clumping up. Again, equal weight, small cap index. Not much to see here, just a choppy mess, right? What can you really say about this? It's a choppy mess. Let's look at IWO, the small growth. Yeah, so look at small growth, small cap growth ETF. IWO, lower high, lower high, lower high, right? Lower low. Choppiness. Here's a lower low right here. Everything is screaming down. So, you see, and even on this snapback, nice day, 2.83%, but it's just kind of coming into the moving averages. So I don't trust the rally on Friday. Again, I could be wrong, but I think for the growth names, I think there's some issues still. Okay. Let's look at XLF. Okay, the XLF near all-time highs, right? You gotta love that. Financials continue to work, right? We love that. But whereas SMH, SMH looks more like the IWO. Kind of, we had a snapback. I mean, so I'm watching this 216, 217 area, somewhere in here. That's where I held last time, but I think with this trend line getting broken, again, I don't know if I showed you this trend line last time. I think I did. Here's the trend line, and you could draw a couple different types of trend lines, but they're all in the same general place. Now all the moving averages are now crossing and moving lower, and I think that there's a real important area. We'll call it 216, 217, maybe on the low end 210, right? I could see maybe 210 also, for the area. So I think that's a place that has to hold. But this is definitely leading to the downside. I think as long as SMH is in this type of look, which at best is a range, right? And it may just be in a range and maybe chopping around in here for a while. But it's definitely not giving me the warm fuzzies with all the moving averages crossing and everything else. I want to see this. I don't want to see this. So there you go, SMH. Next up, let's look at lumber. Commodities have been ripping. Lumber has been in the news. We've been talking about lumber for a long time, more as an indicator than a trading vehicle. But ever since it broke out here, right? We talked about it early in February. We tested and then literally screamed higher. So I mean, lumber looks amazing. Commodities look amazing. Things are near all-time highs. A little choppiness in here. It's funny now that the news and everybody else are making memes and jokes about lumber screaming higher. That lumber's the next Bitcoin, right? I've seen that one. That tells me that maybe we're at a near-term top potentially in lumber. Again, this is more of an indicator than a trading vehicle for me, but we're starting to kind of either consolidate or potentially top around. You look at this candle and that does not make you very happy. So we'll see. Housing market is crazy hot. And so let's look at XHB just for funds. Yeah, so XHB took a hit again. There you go. There's your lumber. Let's see, May 10th. Let's go back to wood. What day was this? May 10th, right? Looks exactly the same. Boom. And it kind of is now starting to retrace. And, the weight of the market, again, we had a nice uptrend here, and then it went kind of parabolic. So now the correction has to happen. Not saying it's going to zero, but if it comes back down, maybe to 68, 65, whatever, that wouldn't be surprising. Then going back to lumber, coming back down, even retesting, 87. That wouldn't be surprising, especially if there's further weakness in the market. So there you go. There's lumber. Let's look at bonds. That over, get rid of volume, and I don't like all these moving averages anymore, so we're gonna get rid of that. All right. So this week we had a spike up in the bond ratio that I follow, IEI versus HYG, and then it came down towards the end of the week, right? Now, we do have a flattening and slight curve of the 23-day EMA on this one, but price is literally right there. So for now, it looks more like a situation like this and like this, right? Than like this. That's good. That's what we want to see. Listen, could it spike up more next week? Absolutely. I mean, it's definitely making so far, it's a higher low potentially. We don't know, could continue to roll over, but they're not giving me pause or reason to be concerned of a systemic risk or something overall that I'm really concerned about. So that's bonds, IEI, HYG. Looking at the VIX, VIX spiked up, right? And then it came right back down. Again, 18.8, not a concerning number at all. I don't think there's any systemic risk. Obviously this was more concern right here, but VIX looks fine. Remember, that's the VIX of the S&P, and here's the VIX of the Nasdaq 100. Again, looks very, very similar. Not concerning at all. Put call ratio. So we saw a big spike. People got bearish last week. And what did the market do? Boom, everyone went short. And it said, okay. And it ripped the last couple of days of the week, right? Doesn't mean that we're going back up here. We could. It doesn't mean that we're going back up here, right? We could. Right now, this is a non-signal. This was promising to almost, listen, I wanted to get up here because that would tell me that the market is ready to rally again. Doesn't have to go up there, right? It hasn't been up there since 2020, right? There's COVID right there, right? That'd been a great spot, even if you would have gotten a little bit early, right? February 25th, March 12th, right? Those were good spots to start to add on some exposure to the market. So we're not seeing that yet in either direction. I do know that, next week, if we roll over again, I think people will jump on the puts, and we may see that last push down. That's what I hope for. I'm hoping that ABC that we talked about, right? I'm hoping right here, everyone gets bearish, pushes that put call ratio to an extreme level, right? And then that would be my signal that, okay, the market's ready to go back up, and let's go heavy risk on the growth names again. But we're not there yet. Again, that's one scenario. Value line geometric index. So we've been talking about this divergence for a while. It started to play out. Now it's trying to retake it. Okay. I mean, that's good, right? That's good. We'll see what happens with that. Didn't make a new high yet, so we're watching that. But divergence is still there, right? Even though it did break down right here. So we're watching, not a completely cluster, right? But wouldn't mind it, if it did come into that 600 level, was that 10%? All right, 10%. We could deal with 10%. So there you go. Value line geometric index holding up pretty good. We got to also look at gold, right? Let's look at gold. So here's gold, and let's just go to a weekly and get rid of that RSI. Boom. So here's gold, and it is trying to finish this base. It broke out this downtrend line. Gold miners are, They already broke out, they retested, and then they're breaking out again. I'm sure it makes more sense. Yeah, makes a little bit more sense if you look at the candles. um, and broke back out. I do own a few gold miners right now because I like this. I like the retest, the hold, and the breakout. That's pretty awesome. So gold miners, looking at gold to SPX. Let's see what that looks like. So we came back down here, didn't quite make a lower low, and now we're trying to rally back up. I don't think there's much to see there at this point, but I like gold miners here. Look at the gold miners. Yeah, that's a beautiful retest breakout. Again, I got long a few of them, a few positions in gold. What else? Let's look at MMFI. So percentages of stocks below the 50-day. Again, switch to a line chart. At 52, again, really a non-signal. It just means that there's some choppy nastiness going on in the market. That's weekly. Let's go to daily. It's still at the 52. See the downtrend. We're making lower lows, lower highs. So there's definitely a downtrend in this deterioration in the market. We'll see if this 38% holds. Obviously, if we get to an extreme level, that would be awesome, right? This would coincide with, maybe another 10% correction. This would coincide, hopefully, with very bearishness, and we'd put that story together and say, okay, this is a great time to get long. We're not there yet, right? Here's March 16th, right there. So we're not there yet. And again, it doesn't have to come down here, but that would be a in your face signal, right? Along with the call ratio, you know, there's a 12th that happened on that one, along with hitting our, my downside target of the 300-ish area in the Qs, right? I'll put all that all together. That'd be amazing. I like the risk reward there. Let's look at bonds. Let's look at TNX, the 10-year bond specifically. So, bigger picture, going to the weekly. This was the important area. It kind of spiked up. This was the problem. Made a bull flag. Now we'll go back to a daily, zooming in. It tried to break that bull flag, right? Early in the week, we saw the weakness in growth, and then it railed it in. We saw growth kind of take off again. So it's kind of just moving sideways in a range. If we started to take out 1.75, I think that, that's probably going to be a negative for growth, positive for the interest rate sensitive, commodities and REITs and all that kind of stuff. But as of right now, not screaming higher, right? We want to avoid things that big moves like this and big moves like this, right? That's the stuff that the market really hates. So stop the big moves, get the choppy around. I really don't care if we go to 2 or 3 on the 10-year, right? That doesn't bother me. It's how we get there, which is the problem, right? 2 would be right here. Sure, why not, right? That makes a ton of sense. 3 is all the way up here, right? Something here. That's very, very possible. Above 3, I think that gets a little more dicey. But, 2 to 3, very possible. How we get there matters, all right? So just putting it all together, I think that, overall, the market is not giving any signs of disaster. I think this is a normal, healthy correction, top to bottom. If it did correct all the way, it would be 12, 13%. Again, very normal. If it works in this ABC pattern, that would be a very normal type of psychological move for the market, right? Big down, snap back, right? Get some more buyers in here. Then it rips down to the downside again, hits the target. People get bearish, right? People get all the way bearish, and the put call ratio gets up here, right? And then, stocks are underneath their 50-day when everyone's, that's where everyone's stop is. So, FFTY, sorry, FI. Stocks get underneath the 50-day. They get down here in this range because because no one wants, it's the end of the world. Everyone's coming, and that's when there's maximum opportunity in the market. And so again, I am fully invested right now, but I don't have any growth names in my portfolio. I have oil and gas names. I have, I have a REIT. I have, gold miners and things of that nature. Um, and so, but if we get all that, I'd probably rotate back into growth names because I like the risk reward here. We'll see. Anyway, if you want to see everything I hold on Wednesday mornings, I do a whole portfolio overview on my channel. So I post that every Wednesday, and it shows you transparently what I'm trading and how I'm trading it, and where I'm taking profits and where I'm stopping out, and it's not perfect, and but it's just how I'm doing. I trade a real account, real money, my money. So it is what it is. Appreciate you watching the video. If you like this type of video, please like and subscribe. Thank you very much. Let me know what you think down below in the comments. I respond to all the comments, so I love to hear what you all think as far as how you're trading this market and how you're doing with it. All right, take care. Follow me on Twitter, AlphaCharts365. Again, appreciate your time.